What are the headlines?
Nothing surprising. She's testifying before the Joint Economic Committee, and she says pretty much what you would expect from Janet Yellen at this point, that the economy is getting stronger and the labor market is getting stronger. Wage growth remains relatively modest, but given the economic conditions right now, and here's a quote from her, this will be the money quote for people in the markets today, we continue to expect that gradual increases in the federal funds rate will be appropriate. So you can look for a December move. She's pretty much locking that in right now. She goes on to say the expectation is based on the view the current level of the federal funds rate remains somewhat below its neutral level. A couple of other interesting things that she notes today. The question of inflation. She repeats the Fed's normal mantra that what we've seen is temporary and likely to pass. And she says, I anticipate that inflation will stabilize around the 2% over the medium term. However, it is also possible that this year's low inflation could reflect something more persistent. In other words, here's a handoff to Jay Powell. You're going to have to deal with this if we turn out to be wrong. And then finally, the other headline of the day is perhaps that picking up on what Powell said yesterday about maybe we're seeing a little bit of toppiness in the markets. And Jay wasn't talking at the time about Bitcoin, but the equity markets. She says they're not particularly worried. Although asset valuations are high by historical standards, she says in her text, overall vulnerabilities in the finance sector appear moderate as the banking system is well capitalized and broad measures of leverage and credit growth remain contained. Some people think that the Fed is raising rates to maybe choke off an incipient bubble in the markets, but Yellen suggests that's not the case. They're just doing their job at this point, given the state of the economy.